everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the How to Trade Gold and Silver live webinar over at Switch Markets. So we're going to go through exactly how to trade gold and silver over on your MT5 platform. I'm going to show you the assets that you can go ahead and target. I think we've got some pretty good action today in the gold and silver markets. I mean, just all over the map. We were way up earlier, up about 11%, 12% on silver. That's come back down. So we've seen just incredible intraday volatility. We've also got maybe a little bit of a trading strategy that I'm going to preview today. It's going to be our 9 EMA strategy with RSI confirmation. We're going to show you some of the features on MT5. I'm going to go ahead and place a few live trades so you can see exactly what it's like to trade gold and silver. And lastly, we'll take some questions. I know there's a few of you that have some markets that you'd like to look at. Towards the end of the stream, the last 10 minutes, 5 or 10 minutes or so, I'll go ahead and I'll answer any questions that you may have with regards to any currency pair or market, and we'll go ahead and take 3 or 4 of those if you'd like. We've already got one on the dollar yen, so I'll go ahead and cover that towards the end of the stream. So I want to welcome everybody. If you're brand new to this platform, this is going to be the How to Trade Gold and Silver live stream. We're going to go ahead and get to that in just a second, but I want to say hi to everybody out there. You got it. Good to see you. You got it. 300. Tina Shane, good to see you. Tina, welcome. Jason, good to see you, Jason. Team Marina, always a pleasure, guys. And then over in the How to Trade community, Bobby Bob, good to see you, Bobby Bob. Gordon Williams, why is the USD going weak against the yen? Well, we'll go ahead and cover that towards the end of the stream. If I forget, be sure to remind me. Tuku, good to see you, Tuku. Andrea Gorwal, Ralph H., Janet, good to see everybody. Welcome. The biggest thing that we need to remember today is that this is a webinar, so if you have any questions at all about gold and silver, be sure to ask. And like I said, I'll show you some of my personal views toward the end of the stream. I was in there sort of slugging it out with a little bit of scalping today. I'm doing some scalping on the Euro FX futures and also WTI crude oil futures. That's pretty much a daily thing with me. A lot of really weird things going on in the market right now. You've got to be very, very careful with what you're doing with your risk exposure. We saw a massive sweep that really swept both the Euro USD and crude oil higher. That sweep came through at about an hour ago. Maybe an hour, about an hour ago or so. And since then, we've really settled down. So remember, if you're trading right now, I mean, we almost need to have like a Trump watch. If somebody's saying something in the White House that typically roils the markets, we're seeing this once a day. Very difficult to rely on your technicals when that is the case. However, it also gives you a tremendous amount of opportunity. You're just going to have to be a little bit, I would say, a little bit more aggressive with your risk management. Today, interesting type of a situation. I'm at about break even scalping futures today. Now, I'm not real pleased at all about that sweep, but we're in a pretty good position to close the day and probably pull a profit out of it. If I had to bet, I'd say we're going to pull a profit out. So good to see everybody back. All right, guys, let's go ahead and get to it. Remember, go ahead and sign up for our Switch On newsletter. If you're interested, put the link there in YouTube. I'll go ahead and drop it in your How to Trade community as well. Remember, this is something that comes out. We just put it out before the Tuesday UK session. So if you're interested, you can go through and take a look at some of the things that I'm highlighting, some of the keys that I'm looking for. Crypto was a big part of this week's Switch On, so be sure to check that out if you're interested in Bitcoin and Ethereum. And then also we put out our weekly hot picks, and those are our trades of the week, and those go out on our YouTube channel over there at Switch Markets. All right, guys, let's go ahead and get on with it. Now, with regards to gold and silver, like I said, I'm going to cover this through the MT5 platform today. And it's going to be a relatively sort of a tutorial. We'll talk price action. We'll talk strategy as well. But for right this minute, we're going to go ahead and just give you the basics. If you have any questions on a specific market, be sure to give it at the end, and I'll be sure to cover that. All right. So the first thing we need to cover here is what is gold and silver? Gold and silver are commodities, all right? Now, the silver is more used in industrial applications, things like superconductors, AI, all have increased the demand for silver. Gold, a little bit different. We don't really use gold as a conductor anymore. You know, in the old days, they used to put them in television sets, picture tubes. They don't do that much anymore. Gold is sort of your store of value. And what that means is it gives you an opportunity to put your money in an asset that's never been worth nothing. That's how it's different from crypto. Gold's never been worth nothing. And it's really a traditional safe haven. So if I'm interested in getting away from geopolitical risk or systemic exposure, I can buy gold. I can buy and hold gold. Now, a couple of different ways to invest in these things. You can buy and hold the physical metal, or you can trade derivatives products. Now, we're going to focus on the derivatives trade today. We're going to focus on spot markets and also the future markets for gold and silver. So I want to start you off over at Switch. You'll notice probably right behind my picture, you can see that you sort of have a little pop-up screen. Go ahead and give that a click, and it's going to go ahead and show you trading. So commodities, this is what it's about. Trade thousands of global markets. You've got gold versus the USD. You've got silver versus the USD, and you have things like crude oil, and then all these other things. In any case, you can get huge leverage on these contracts. They're some of the most popular in the world right now, gold and silver, and that's because they're so volatile. So feel free to open a demo account, start trading these on practice. That's what we're going to be doing today. I'm going to be trading my Switch Markets demo, and we're going to show you exactly the ins and outs of these markets. And when you're ready, you can open a live account. I've got lots of live accounts. So today wasn't much fun. I'm not done with these markets yet today, but I don't like whipsaw trading, and that's exactly what we've seen, especially in WTI crude and what I saw the Euro FX. But it's going to be a lot of fun. I'm pretty sure we're going to get on the good foot towards the end of the session. For you, if you're trading commodities, gold's on fire right now. Silver's on fire right now, no question. The biggest thing that you need to remember about these commodities, sure, the 1 to 1,000 leverage and all that stuff is incredibly attractive, but you got to remember the more volatile these things are, and right now they're at a fever pitch volatility-wise, you'll understand that your margins have been raised, and you're not going to be able to get that big of leverage right now because of the volatility. Don't lose all your money on one trade, and right now if you're taking positions that are not leveraged, dialed in perfectly, you're probably going to lose money trading just because the swings are so big. You're going to get stopped out, and you're going to lose significant amounts just because of the daily ranges right now facing gold and silver. So I want everybody to be on the same page there. You'll also notice that you can trade gold, silver against the euro, Great Britain pound, whatever you wish. Today we're going to focus on the U.S. dollar because that is the benchmark. Commodities around the world are typically denominated in U.S. dollars. So that's what I'm going to focus on. We're going to focus on the value of the commodity itself, not necessarily the value of the currency. We're going to go with the tried and true U.S. dollar, and that's pretty much what these, that is what these instruments are all denominated in. So there's a lot going on there. If you're interested, go ahead and check it out over at Switch, and you can get up and running with your commodities products. Now, a couple of things that we need to do here before we get started. You'll notice down here, you can't really see it because of where my picture is. I guess I can move my picture. Nah, I can't either. In any case, down here, your trader's toolbox. What you're going to want to do is click on your mailbox, and you'll see that you're going to get all sorts of messages. So right here, you can double click on that top one. It sort of shows you when our live streams are and things here for Switch. And then you'll also notice any updates to your leverage. Dynamic leverage. All right, I got this one earlier today. You'll see that all of this leverage, your margin requirements have been increased. They have been increased, and the reason why they've been increased is because the volatility is up. So always be sure to be, sort of in the mix with your trader's toolbox. Know what the deal is. You're going to get notices for my live stream schedule. Those are always great, but your dynamic leverage, that's always big, and you've got to make sure that you know which leverages are being applied, or else you could be in a position maybe to get stopped out of a trade that you didn't mean to. Okay, there's 4 contracts that we need to focus on over here at Switch Markets, or that I'm going to focus on here today for gold and silver. Number 1 is going to be your gold spot contract. That's XAUUSD. That's going to give you an opportunity to trade spot gold. Spot gold. All right, that's the first one. By far, that's the most popular asset, really probably in the markets today right now. Seemingly everybody is trading this one. It's an interesting market. It's an interesting market. The volatility is astounding. We're up about 7 or 6%. We were up about 10% earlier today. A lot going on with gold. Right now we're printing about 49.42, and it's absolutely just huge action. The second one's going to be gold futures. Now this is April gold futures. This is a CFD product based on a futures contract. So if you want to trade futures, which I'm going to talk about here in a second, if you want to trade gold as it pertains to a futures contract, not a spot, then you're going to be looking at this contract right here, and that's going to be your gold. It's going to be GCJ6. That's the symbol. Or you can go right over here to your market watch. You'll notice my picture's cutting it off again, but you just cursor down on your market watch, hit the plus symbol, and just type gold in there. It'll bring up all the assets that are available over at Switch. All right, the second commodity here that we're looking at is silver. Silver, this is the big dog. Right now, everybody's talking silver. Probably the most volatile market in the world right now is silver. So we're looking at a 1-hour silver chart here. XAGUSD is the symbol. silver against the U.S. dollar. Now, the trend has been up. The long-term trend has been up. We'll talk about that more in a minute. But right now, we're sort of seeing that uptrend being challenged and a lot of price action, a lot of a heavy debate about silver right around that 85 level. That's been the story today. So that's the XAUUSD spot silver pair. That's interesting. You can check that out as well. Now, this one right here, this is going to be your silver futures contract. This is going to be SIH6. That's a March expiration. That's called the front month. I'm going to break down what all that means for you in just a second. The biggest thing that you need to remember about this silver contract, this CFD, is you do have an advantage over futures traders like myself. I'm a futures trader. What we have is a situation in the United States where it's very difficult to trade silver futures. You need a lot of money to do it. The margins are astounding to trade full-size silver. As a matter of fact, I don't know anybody that's trading full-size silver. I don't know anybody. That's more of an institutional play, $25 a tick. You're looking at huge margin requirements. I believe they're upwards of 25 or 50,000. I'll look at those in a second. So that is really a rich person's contract. They do have a micro silver contract that we're also going to look at. But once again, the margins are significant, and you can really run into trouble trying to trade those silver futures. So if you're an international client, or let's say you're in the UK, or you're in parts of Africa, or if you're in the Far East, or if you're in Canada, and you have access to something like a Switch Markets platform, you can dial your leverage in beautifully by just adjusting your lot size, and you can still trade silver. Now, even though silver went from 0.02 for your leverage up to about 2%, it's still tradable. In the United States, the margin requirements are extensive to trade silver. I am very jealous that I don't get an opportunity to scalp this CFD product based on the futures contract. I think this is a fantastic product and one that I would sink my teeth into and absolutely love to trade it. Maybe I'll have to move to the UK and get in on this market, because you're doing very well if you have an opportunity to scalp silver and trade silver with so much volatility. All right, so I'm sort of watching this one out of the corner of my eye. What we have here is one of the strategies that we're going to be promoting here in the near future. And what this is this is the 9 EMA crossover strategy. And essentially what you do is you sell when price crosses under the 9 EMA, and you buy when price crosses over the 9 EMA. And we're going to go ahead and use our RSI to tell us when to sell, when we're over 70, and when we're under 30, when to buy. Now, I have this coded up nicely. We're sort of watching this one right now because this, if we do get a close up above the 9 EMA, we may be in line for a signal. You'll notice right here we were in oversold territory right around this trough, so we're going to have an opportunity maybe to execute a live trade in this silver market. Now, a couple of things that we want to talk about. Lot size. One full lot of silver is going to be huge. Your per pip value is going to be huge. I'm going to take that down to a 0.10. I'm going to go a tenth of a lot, and believe me, that kind of exposure is going to be significant. So we're going to go ahead and bring that up as this live trade. And it looks to me like we're going to have an opportunity potentially to get this trade in 3 minutes, as long as we get a close above the 9 EMA. So 2 ways to trade gold and silver on your MT5 platform. You're looking at gold, all right? Spot gold, XAUUSD, gold futures, GC, silver spot, XAGUSD, and then also silver futures. That's the SI symbol. The front month is always going to be changing. I'm going to talk about that right now. So if we have any questions so far, I don't believe we do. Let me see. Tina Jing, move to the UK. You should. Well, Tina, if I move to the UK, I'm going to let everybody know, and we'll all go down to Canary Wharf, and we'll talk trading every Sunday before the markets open. Have a cup of coffee, maybe a couple pints, and game plan for the week ahead. But you guys really do have a lot of advantages over me. You get an opportunity to trade these CFD markets, which I don't. And even on individual stocks, you get that, which is fantastic. So you can use less money to trade more assets. And what you also get to do is you get to trade in the afternoon. You get to trade in the afternoon and early evening. I would love that. I dream of a day when I can get up in the morning and get my cardio, get my gym, get everything eaten, get prepped and ready to trade without still rubbing sleep out of my eyes. I typically have to get started very early in the morning. I'm very jealous of you traders over in the UK. Your time zone really works. That would work towards my lifestyle. That's for sure. But hey, we deal the cards, or excuse me, we play the cards we're dealt. All right, we're starting to see this pull back just a little bit. I'm starting getting disappointed, but I would love to see this close. If we could get this bar to close above the 9 EMA, and it's a challenge. It's a challenge to get these closed, but if we could get this closed, then we're going to essentially look to buy the market, and I'll line the trade up for you in real time here. And we should get a little bit more, well, we should get a signal here, but essentially this plays right into what we're looking at, which is going to be potentially a bid. And you'll see this happens a lot with these 9 EMAs. And believe me, you've got to get confirmation. You've got to get this trade to set, or excuse me, you've got to get this bar elected above that 9 EMA. If it's right on it, okay, right there. There's our signal. There's our RSI plus our buy. Let's go ahead. We're sending them. Okay, we bought the market. All right, we bought right here. Now we've got to bring in our stop loss. And don't worry if you can't follow my strategy. Don't worry about it. But we're going to have a full video out, PDFs, the code, you name it. You guys are going to get a crack at it. Couple of ways to build your trade. This is the way we're going to build it right now. We're going to look at our stop loss right beneath this swing low. If I wanted to be just a hyper-aggressive scalper, I could put it right beneath that price bar and then look to maybe get a 1-to-1. And then our profit target. I'm going to go ahead and approach this like a smart money trader would. I'm not a smart money trader, but you can see right in here, you've sort of got that compression area. You've got that zone, sort of those order blocks on a 5-minute chart. You've got a chance here to get a pretty nice trade. So I'm going to go ahead and put my take profit right in the heart of that order block. And then I'm going to go ahead and I'm going to have my stop losses just dialed in and ready to rock and roll right there beneath this swing low. Now, if I wanted to take more risk, I could. I could back this way off to this swing low down here, sort of exactly where we were in oversold. But you'll notice we were in oversold territory right here as well. So I'm going to go ahead and play this just a little bit tighter. Right up here, right beneath that swing low. Remember, we don't put our stop losses right on it. That's called being a pork chop. You're destined to get stopped out and watch the market reverse. What I want to do, I want to give it a few pips right beneath that swing low, and then we're going to go ahead and give ourselves a chance to get our trade. So right now we're sort of moving north. Let's go ahead to our trader's toolbox and just click the trade, and you'll see right there we're up a few bucks. So this actually is a pretty good size. This size isn't bad at all for me. I'm looking at this. You'll notice just how volatile the silver market is. I know that I don't want to risk the ranch. 1 to 3% of your account balance on any given trade. This right here is a pretty good setup, 5-minute chart. Love the 5-minute time frame lately, especially when we get a trade idea that lines up with this strategy. Right here, you've got sort of a profit of about 30, 40 bucks. We're right around break even essentially. But let's go ahead and see what happens with this profit target. I think that's about a 1-to-1. That's reasonable. A lot of traders really love hitting those home runs, and they're looking for something like this up in here. You want to hit that order block. That's great. You'll notice that you're probably looking at a 1-to-3, maybe in a 1-to-3.5 or a 1-to-4. Interesting stuff right there. Personally, I'm going to bring this right down, and we're going to go for a 1-to-1 and see if we can't at least get this trade closed out by the end of the session. So that's a good look at silver futures. Now, what we have to do here is understand where these things come from. Let's make sure there's no more questions just yet because I want to show you guys the futures contracts, and there's a couple things you need to know about those, and our trade's sort of blowing up in our face right now, but that's okay. We've got a strategy. We've got risk. If we lose, we lose. Hey, believe me, today live trading, live scalping, let's see, I lost 3 trades and won 2, so I'm right at scratch. That tells me I'm taking small losses, and I'm still getting paid for my time. I feel pretty good about that. It's all about cutting the trades off, and this strategy gives you a pretty good way to cut trades off. So in any case, let's see if there's any other questions. Let me see. Eyes hazy. Hey, Shane, we enjoy more flexible trading setups overseas. Yeah, I know. I mean, they're pretty strict here in the United States. It's coming around to tax season. I got to do my taxes soon. I'm looking forward to that. Let's see. You got it. 300 contracts are regulated by the CFTC. Though it's still manipulated. It's less manipulated than spot. Well, there's a lot to say about that, OG. The one thing I do like about exchange-traded assets like futures is that I know the volumes. I know the exact volumes. That's very important to me because the spreads, typically there isn't any spread to deal with, but you're going to be looking at traded volumes, which can be very, very big. Could be a big deal. Let me see. You got it. Spot has a wider spread, which is where most of the manipulation, 100%. 100% you got it. Absolutely. Let's see. We have any questions over on how to trade? Okay, so as far as our futures contracts go, you're going to be looking at the CME group. All right. Now, this is the crux of your futures markets. Now, the futures markets also have a heck of an impact on spot. Now, I sort of went off on a tangent last Thursday. I tried to explain futures relationship to spot, and I got into concepts that are more advanced like basis, delivery, physical delivery, all these different things. I'm going to make this really simple because there's no reason for us to get confused or worry about anything. I already showed you how to trade it. If you just wanted to trade gold and silver on your MT5, that's all you have to do. Locate those 4 products and you're in. But if you want to know a little bit more about why things are priced the way they are, then you need to have a basic grasp of the futures markets. Now, futures markets for metals are absolutely huge. There's no question about it. Now, they don't use as much volume as the spot markets. The spot markets do an incredible amount of volume, but the futures market really is the pricing mechanism that a lot of folks are pricing things like gold. So let's go ahead and check out gold. Now, you'll notice gold futures, full-size gold futures here. Over on the CME, you've got full-size gold, which is what we're going to look at. You've also got micro gold. Micro gold is very good. It's about 1/10 of the size. You're playing for about $1 per 10 cents movement. That's fantastic granularity if you're interested in trading gold futures with a little less exposure. Now, the full-size gold futures, let's go ahead and take a look. Now, what we want to do here is understand the front month contract. That's the big concept that I want everybody to take away from this, and I'm going to try not to get lost in the weeds because this loses pretty much every new trader, and I get a lot of questions. So what we're going to do is look at the quotes. Now, this is what we call a chain, a futures chain. You'll notice that we have a February contract that's still on the board, but look at the volume. The volume's extremely low. You have a March contract that's on the board. Volume's extremely low. This is what we're looking to trade. April. Why April? Because that's where the volume is. That's where the action is. 213,382 contracts have changed hands today. I like that. I like to know exactly how many have changed hands. That's why I prefer futures. But yeah, man, CFDs are attractive. So you definitely are lucky. You get to trade CFDs. 213,382. That's fantastic right there for April. So you say, Shane, what's the big deal? Why does that matter? Well, I mean, it really is essentially what you're looking at here on your gold. That's gold futures CFD GCJ6. That's April. That's gold CFD April. So that's the futures contract right now. You're printing somewhere right around 45.63 or 49.60, something like that. You'll notice these futures contracts, you're going to get a little bit different. Pricing because they are delayed. This is free data here that I'm showing you, but it's important to know where the volume is. So April is where the volume is. That's how we're pricing gold right now. We're pricing an ounce of gold to be delivered in April. Now, a couple of things I want to point out. Spot gold right now is trading at 49.34, and our April contract is trading at 49.68. That means the powers that be, the institutions out there, believe that uptrend in gold more than likely is going to continue. Now, this is counterintuitive for futures contracts. Typically, our near-month futures are going to be priced at a premium over the far month. That's called backwardation. Now, the reason why is why? Just use your head here. This is easy. Because a bird in the hand is worth 2 in the bush. If I can get my hand on an ounce of gold today, theoretically, that should be worth more than being able to get my hand on an ounce of gold in 3 months or 4 months or 5 months. It's not working that way with gold, and I want to point this out because we really do believe that the price of gold is going to keep going up. July, look at July is over 5,000. August, and these are very low volumes, but still they give us a great look at price. September, and then October starts to come back down a little bit. And then you get another bump in December, and then you'll notice January goes up and February goes up until we finally see a pullback in March of 2027. The bottom line is this. The institutions believe that the price is still going to go up. That's absolutely key when we're looking at metals, even our spot contracts. That's going to mean there's going to be some bids hitting the market as opposed to sellers. All right, let's take a look at this contract specs, full-size gold. You can see all these different things. The big thing I want to point out is some of your margins. Or excuse me, your specs. It's just, what is this? 100 troy ounces is the contract. Price fluctuation is 10 cents for $10 per tick. It's a significant contract. I typically trade multiples of gold, 2 and 3 contracts of full size. I'm not really interested in doing that right now with the volatility. It's just too much money. I mean, it really is a significant capital outlay. Those are big bets. The margins are interesting. Right now, you can see the margins for a full-size COMEX gold. You're really looking at significant amounts of money to hold these things overnight through a market closure. I mean, that's a significant amount of money, what, $37,000, something like that. So if you're trading, say, a CFD and you're only dealing with swap fees, that means you can swing trade things like gold, and you don't particularly have to really do anything with regards to depositing to meet a margin requirement or anything like that. So you got a big advantage with CFDs, especially if you're trading metals. Even spot gold, you're still looking at the swap fees there. So I would much rather have to deal with a swap fee, calculate that, as opposed to having all this money that I have to post to carry a basic position through a market closure. All right, that's a look at gold. Now, I just want to spend a bit of time on the silver contract because it's important you see how big of an advantage you have. Right there, silver futures. Full-size silver is a huge contract. Absolutely huge. Let's go to quotes. You can see where is the volume. Now, this is sort of tough in here. Volume 652 right there, March silver 103. Now, unfortunately, it looks like that we're getting gutted. Yeah, we just got stopped out on our trade. Let's get back out here. Got a nice little price action, and now we swept lower, so silver's coming off sort of with that macro trend. Our trade there was a loser. It's okay, though. We're not too worried about it because we have everything dialed in. This is an approach where if you're trading it on a 5 or a 1 minute chart, you're going to be taking a lot of trades. So something like this is very interesting. Now, what we have here is a silver contract that's based on what? It's on March. Now, that's not an accident. This March contract is where the volume is, which is right around 103,000. That CFD mirrors that March futures contract. So I wanted to point that out. Now, is it the same type of action? Is the backwardation there for silver where it's not for gold? Well, right now we're looking at about 84.70. What's the spot market for silver? About 83. Now, remember, a spot market's what I can go buy an ounce of silver for today. Silver futures is this is what I'm going to take delivery in sometime in March. So we're still betting that these metals markets are going to go up. That's fascinating stuff, except right there, August, we're expecting a pullback in August, but extremely low volumes. That more than likely that inefficiency will be filled in almost for sure. But take a look. The futures markets are telling us that this uptrend's not over, that it's not over. So that's what I want to say about futures. Remember, those CFDs are based on your front month futures contract, which is what? It's the futures contract with all the volume. All right. Covered a lot right there. Give you the breakdown of the futures and the spot. We're going to go ahead and trade some more, make some more trades here on our spot market. I'm actually going to drag and drop and see if we can get that EA going in real time, see if it performs for us. I think it's going to be a pretty good one, though. Also working on some back testing, which should be interesting as well. Very careful about how we're going to release this stuff, though. It's easy. Anybody can just grab a code and put it in their MQL5. We want to make sure that we have something for you that you can really use. Okay, let me see. T Marina. Let me see. T Marina, yeah, good to see you. Shane, isn't it better to trade contracts versus buying spot or the actual bullion since you're not investing to possess and hold on as a form of money? You're not wrong. You're not wrong, T Marina. We're traders. So for us as traders, what you're going to want to do is you're going to want to stay in the paper world, meaning you're going to buy and sell. I mean, for instance, my positions today, I had no intention of taking delivery on a bunch of euros, and I had no intention of taking delivery on 1,000 barrels of crude oil. I had no intention of doing any of that. So what I could do is get in and out, open those positions and close those positions, and in doing so, really limit my exposure to anything with physicality, meaning I don't have to take delivery of anything and store it. So you're 100% right. If you want to trade, you trade a derivative product. You trade something like a spot pair, meaning the XAUUSD is a big one, and then also those futures contracts are pretty big as well. So which is better? For me, I trade the metals futures, but it does limit what I can do. You saw how big the margins are. I didn't even show you the margin for silver. Let me see. That was actually a pretty good one. Yeah, it doesn't even have them up. I mean, let's look at the margins for silver here. I mean, it's an astounding. I mean, right there you go, $84,000, $85,000, 45% of the notional value of the contract. I mean, that's absolutely huge. So when we start talking about margins, you can see how you have a tremendous advantage with regards to trading a CFD on a futures as opposed to futures because it just takes less money. For me, silver's a non-starter because the margins are so big. So that's a long way of saying that theoretically you could say, yeah, you want to trade derivative products. And if you have access to like a CFD on a futures, then yeah, you can trade it just the way that you would trade or you could swing trade it because you're not going to have that huge margin to deal with. Now, the thing of it is if you're buying and holding, you probably want to play spot. I don't even think if you're going to be a buy and hold metals person, you probably want to be looking at things like ETFs, maybe mining stocks, stuff like that. Maybe I don't recommend mining stocks, so that was a bad example. But buy and hold the physical metal, you could do that. But that's buy and hold. I mean, you're not interested in trading anything. If you're a trader, you stick to the derivatives so you can get in and out because the market has liquidity. It has inherent liquidity. That's absolutely huge. So I would trade contracts. Yeah, absolutely. I like the futures, but once again, you can't hold them. So like if you wanted to take a swing trade, you're probably going to be looking at the XAUUSD so you can hold that thing and just figure your swap fees from there and see if they're a necessary evil if you can get the job done. Those margins knock you out. I remember in 2008, South Africa traded the biggest futures derivatives contracts worldwide. Really? 2008. Very nice. It's in our Wayback Machine. That's for sure. Yeah, absolutely. Absolutely, T. Okay, so what do we have right here? We got a spot gold market on the 1 hour chart. Let's go down to a 1 minute chart and see exactly what we have happening here. I'm going to go ahead and go to view. Let's go ahead and view our navigator, pull up our navigator, and we should be able to see, you can see how many versions of this thing it took me to code. It. Let's go ahead and see our expert advisors under EAs. We're going to go ahead and go with the final 4. Let's see, right down here is going to be final 12, and this was about a 50 iteration thing. You drag and you drop and you hit OK, and you can see right there we've got a 100 or 200 bar look back where you can have these entry points. That right there was a fantastic entry. That right there was a fantastic entry as well. Do we have another entry brewing? Let's see, what is that right there? 29.17. So right now, 29.17, we're in oversold territory. Anything beneath 30, that's going to be our happy zone. That's where we're going to want to really base our stop loss on. So now what would we be doing? We would be looking to get our trade on. What we need is a bar close above the 9 EMA, and we're in there. 1 minute chart. These are pretty good trades. I mean, no question about it. Back here, you can see our gold carrot. This gives us a nice bid signal, easily a 1-to-1, almost a 1-to-2 payoff there. And then right here, here's our gold carrot, and you can easily see stop loss is going to be right down in there, and you got easily a 1.5 to 1. So beautiful time frame. What you're going to have to do, and there's no two ways to say this, you're going to have to understand when you're trading this kind of volatility, you've got to cut your leverage. You've got to cut your leverage. Now, a lot of that's going to be forced upon you because of the increased margins. But inherently, you should be always dialing your leverage in so it matches your capital not your capital requirements, but your capital resources. So one of the ways that you can do that, and it's a free giveaway EA. I've been asked to make you guys full aware of what's available for you here. EA tools for traders over on Switch Markets. And one of the things you can do right here is go with your risk management EA. Download it for MT5. I recommend MT5. A lot of you trade on MT4, still trade on MT4. Make the move to MT5. And the reason why is you get thousands of markets with Switch. You're not just limited to just a few. So that's the first thing I would say. Now, risk management EA, download that for MT5, add it to your chart, and you're going to have a chance to step in, develop your stop loss, location, and your optimal sizing according to the percent of risk you want to put in there. So if you're risking 3%, I'm going to tell you exactly where your stop loss needs to go. And then from there, you need to build what you think your next level is, what your profit target is. Definitely check that out, especially if you're trading gold and silver right now. And that's automated. That's an easy one. We'll probably do a video on that relatively soon if I don't already have it in the queue. So our 1 minute chart right here on gold, spot gold futures. One of the things that I would highlight is how big's the spread? How big is the bid-ask spread? It's significant. It's significant, that's for sure. It's moving so fast I can't really see it, but it's big. So the reason why that spread is significant is because of the volatility. And right now you're seeing huge price action. Make no mistake about it. You're back down there. You're beneath 30. We just need a close above the 9 EMA, and we'll take the trade. Now, do I really hate taking the trade? Not really. You'll notice that our buy sides have worked perfectly today. Why? Why do you think that is? 1 minute chart. Why would a 1 minute chart have anything to do with the daily? Because it's trending. The market is trending. Well, Shane, you said it's sort of a bearish trend. Lately, the sellers have been there. But today, gold's up 5%. Silver's up 5%. It stands to reason that your bids are going to be winners, yeah? Or at least give you an opportunity to maybe make a trade that's got a little bit of oomph to it. One thing we can't measure in the markets is follow-through. And anytime you get a market that's sort of moving north for you, maybe you're looking at the buy side of this strategy. When it's going down, maybe you're looking at the sell side. Dial in the proper time frame. Is it appropriate to trade the 1 minute time frame right now on gold? 1,000% yes. 1,000% yes. Why is that? Look at the size of your range bars. They're big. Now, the ideal timing, the timing isn't that great. I mean, if we're going according to Hoyle session times, we're trading basically the middle of the U.S. session. It's not great right now. It's not. I mean, it's not as good as it was earlier today during that London U.S. overlap. Still, though, you're during the U.S. session. COMEX gold hasn't gone off the board yet for the day. The futures haven't started to dry up. You got a chance to trade right here. 1 minute chart, we're looking for that close right above our 9 EMA. That's going to be our long, and then we're going to buy the market, set it up. So far, so good today. If you were trading this really completely today, you'd be in pretty good shape. Right there, you'd have lost that sell, but then that's a huge sell. That's a huge buy. That's a huge buy. What are we really looking at doing here? That sell right there worked. You had an opportunity potentially to grab two beautiful buys, and then maybe we get a third buy here. So if you're going to, when all this stuff comes out, when the code comes out and the video comes out and the PDFs come out, when all this stuff comes out, you have to sit down and ask yourself if you want to be a systems trader. Because if you're not a systems trader and you say, okay, I'm going to cherry pick this one and I'm going to cherry pick this one, you may be really good at cherry picking. You may see a filter on the board right now that I didn't see. But typically, we've got a lot of filters already in action. We've got our RSI as a qualifier. We've got the 9 EMA as our trigger. That's our hot. And we got our risk management dialed in. I'm not sure really what else we need. All right, let's go ahead and take a look. We've got a minute. We get a 1 minute close above our 9 EMA. We're going to go ahead and send it long, and then we're going to set the trade up. The most important part about executing a strategy like this is to be consistent, number one, and to set your trade up. Set your trade up in a consistent fashion. So right there you can see we sort of rejected the 9 EMA. It's actually been a really good sell for about the past, 1, 2, 3, 4 tests. I mean, the other thing you could look at, too, if you're creative, you could say, what is this 1 minute chart really signify? Downtrend? Trend line. Do we have a trend line up here? These things aren't very easy to draw on MT5, but something like that. So right there, there's a peak, there's a peak. What are we really doing right here? We're trying to break that trend line. What's our qualifier? RSI beneath 30. That's where we're going to stop ourselves out at. Our trigger right there is our 9 EMA. We close above the 9 EMA, then we're going. What essentially are we betting on here? We're betting that the trend is changing. We're betting that this trend line, this 1 minute trend line is gone. Now, the beauty of this is it can be a very tight trade. Ideally, we'd love to see us get a close maybe right in there. Profit target's going to be right up in here. Stop loss is down there 1-to-1. And then it's just execute the trade. That's what I would say. If you wanted to go for more money, you could shoot for that right up there. 1 minute time frame, 49.52. Be a pretty big trade. Of course, we got to get it first. And right now, it doesn't look like this is going to cooperate. I'll keep one eye on this one, though. That's for sure. Interesting. All right, let's go ahead and take a look at our silver, our spot silver. You can see right here, we've got it on that 1 hour time frame, that 1 minute. Sort of, not really. I wouldn't say similar to the gold, but sort of flattened out right around that 83 area, 84 level. Let's go back to our 5 minute duration there. 5 minute was interesting. We sort of had that 5 minute bid, and then it came back down and knocked us out of the box again. Let's go ahead and see if we can add our strategy to this chart. So we go right over there at 12, drag and drop. Okay, add it. Okay, right there. There was our bid. There was our loser. Do we still have an opportunity to trade this thing? Doesn't really look like it. We only have a lag of 7 bars on our RSI. It's got to get the job done within 7 bars, or we discount it and we reset to the next trade. Interesting stuff. Let's go back to our gold 1 minute, see if we can get a little love here. We'll give this one, let this one simmer for just another minute. And if we don't get this trade opportunity, then I'll be willing to take really any questions that you have. We've already got one on the dollar yen. I'll be sure to take the dollar yen trade. Let's give that one more minute. I'm really waiting on that crossover. So if we have a 7 bar lag, which is right there, so right here we're in oversold territory, particularly right there. So that's 1, 2, 3, 4, 5, 6, 7. So this is going to be borderline. It's got to go right now. Right there, we were in oversold. Nope, right there. 1, 2, 3, 4, 5, 6, 7. We'll see if we get the signal. If we don't, we just walk the other way. Bottom line is this. All of that counting, you don't have to do any of that. It's all programmed in. It's all programmed into the code. So you got that qualifier going for you too. So it's a package. It's a fully functional trading package. We haven't automated it for your entries or anything because that's sort of falls outside of the scope of what we're trying to get accomplished here at Switch. More like give you a place to begin with a strategy you can refine. Let's see if we get that gap up and we get the trading signal. Then we're going to go ahead and buy this market. Okay, there it is. There's your pop-up. Let's go ahead and buy it. Okay, there's our bid. Alert comes up. There's our bid. We're long. So what do we want to do here? First things first, you want to go ahead and set your stop loss. We're putting it right beneath that swing low. Where does our profit target need to be? We've got options. For me, I'm a 1-to-1 trader, but if you wanted to go, one of these, where you wanted to go with a market structure type of an approach, something like that, you could put that on. Just depends on what you want to do. So your stop loss down there, your take profit. Let's go right here. That's going to be risk. Let's take it. Let's bring it right down here. That's where I like it. So it looks like our trend is sort of breaking a little bit. Our stop loss, we're risking about 215, 208. Let's put it right there. That still gives us a pretty darn good risk to reward ratio. And I think we've got an opportunity here maybe to make a little bit of money. So let's go ahead and let it play out. One of the beauties of this strategy, though, one of the things that you can do is that if you set your strategy up to be a 1-to-2, 1-to-3, 1-to-4, you don't have to hit every trade. You don't have to hit every trade. You can hit a smaller percentage and still make money. We showed you those winning trades on this 1-minute time frame with gold. It was a pretty good day if you traded really during just that London-US overlap. Pretty good day. Does this trade win or lose? I have no idea. I have no idea. Are we executing it in the right fashion? Yes, we are. Every good trade has 3 parts. It's got a stop out point, a profit target, and an entry. Our entry is pretty good. You'll notice where we got filled at right there. We actually got filled pretty good. We got filled sort of on a pullback of that bid-ask spread, so that's great. Puts us in right there. Market's rolling. We're in the positive, about $90, $80. We'll see if this thing plays out in the next few minutes. Okay, now I had a couple of questions here about, let's see, US dollar, Japanese yen. Let me get back over. I'm running like 3 chats at once right here. Let me see. Let's take this one from Gordon Williams. Let's see. Why is the USD weak against the yen? I'm buying. Well, I mean, big picture, why is the USD weak against the yen? I think the USD is just sort of in no man's land. It's flowing back. It's flowing forth. We don't really know if it's strong or weak, and a lot of that has to do with the new Fed Chair Warsh. Sort of sent some ripple waves through your economic environment. That being said, I'm not really expecting the US dollar to match up very well at all against the Japanese yen in the coming months. I think you're going to see, as long as that BOJ stays firm with what they're saying, you're probably going to have sort of a hawkish JPY. So let's go ahead. I'll go ahead and pull this up on our, let's see. Let's go ahead and pull this one up on our Fibonacci's. This is something completely different. If you're brand new to the live streams, then this is TradingView, and this is sort of what I like to use. US dollar, Japanese yen monthly chart, 152 that's the pick to click down there. You got 38% retracement. You've also got last month's low. You've got a 13-month EMA down there at 151.81. That 152 level makes me pretty happy. I like it. Now, as far as what's happening right now, choppy. Very, very choppy. Very, very choppy. I don't necessarily like it. You see right here, nice sort of rebound, I guess you could say, on the daily. What could we do with our Fibonacci's? This gap right here filled in. Gaps get filled, gaps get filled, gaps get filled. Spike high to a spike low. If you wanted to step up and scalp, I wouldn't fire you for taking the short right there from 156.50. That's not a bad area. Or 157.70 if you want to be patient. If you want to buy this market, I would wait. I mean, this area right down here, this 152 trade that developed back on the 27th of January is about as sweet as it gets. If we get another shot down there at 152.04, something like that, then we'll have an opportunity potentially to grab a trade. That's what I would look at for the dollar yen. All right, everybody, let's go ahead and check out on our pet rock. I don't think anything's happened yet. Not really. It's right around even, about plus $50. One thing about these, they can really take some time to develop, but you'll see you're sort of still above this trend line, which you're going to notice as we get further out in time, that trend line's probably going to line up with our stop loss. So if this trade does go against us, we've got a concrete stop out point to get out. One of the things that I would say is it's probably not the best time of day to be doing this, getting towards that late U.S. session. There has been a lot of volume really come off the board here in your metals markets, but they're still moving. Can you still do it? Yeah, you can still do it. It's just your odds of this thing drying up and getting choppy are very, very possible. And you'll notice right here on your RSI, that's exactly what you're seeing. RSI is right around 50. So it could either break down or up. We don't know. All we know is where we've got to get out of the market, if it comes our way or if it goes against us. Now, the last thing I would say, timing. It's going to be a part of the video. We have a trading sessions EA. No, it's not going to let me attach that. In any case, trading sessions, it's a pretty good EA. It's going to give you an opportunity potentially to spot out your trading session before you get started. And so if you're going to do something like this, perhaps you just drag and drop. Let's go ahead and attach it. And you'll see right up here, you get the buttons. Let's see. Let's get rid of that one-click trading. Something like that. You click, is it the Sydney session? No. Is it the Tokyo session? No. Is it the London session? No. How about the New York session? We're right in the heart of the New York session. So that right there could give you a pretty good idea of when to even start before you just dive in and start trading something like the 9 EMA. Remember, gold, silver, they are 24-hour commodities. Typically, I don't like getting started in the tail end of the New York or the Sydney session. So I would definitely like that London-New York overlap, something like that. If you step back, you can see that that's sort of coded right there in orange. Also, if you wanted the Tokyo action, Tokyo-London overlap, not bad for gold either, but you'll typically notice that volume picks up, business picks up during that London-US session, and that can be absolutely huge. So that's just a nice little color coding for your, I don't know, for your use, I guess, for your pleasure. All right, everybody. Our trade's doing all right. We're broken positive. We're up about 150 bucks. We'll see if that goes up and gets paid off. I really like I like the long side of these markets today, but it's problematic this time of day. All right, everybody, that's how to trade gold and silver. Remember, you got 4 big products that you can focus on. We didn't even touch on ETFs or ETF CFDs or mining stock CFDs. I think we're going to go ahead and save that for another time, but you've got plenty to trade there. You've got the silver futures, the CFDs on the futures, and then you've also got the spot gold and spot silver. 4 nice contracts that you can sink your teeth into over at Switch. All right, everybody, if there's no more questions, I'm going to go ahead and exit stage left. I want to thank everybody for joining me today on our Switch Markets Live webinar. I think we've had a pretty productive session here. A lot going on in your metals markets. Remember, the margins are always being adjusted according to market volatility. And if you have a strategy, I highly recommend having some sort of strategy. This 9 EMA, it's not a holy grail to making money, but it is a decent place to begin. Not a bad place to sort of put your thinking cap on and begin refining it to your needs and your desires. All right, everybody, that's a wrap. Have a fantastic trading session, as always. We'll be back tomorrow. We'll be back tomorrow across all of our channels, and we'll be covering the, futures, Forex, cryptocurrencies, and more. I'll be covering probably promo on the BOE, seeing exactly what's going on with the BOE and potential rate cuts or rate hikes. We'll just find out. All right, everybody, have a fantastic trading day. Trade it well. We'll talk soon. See you.